All right, everybody. How's everybody doing? Can everybody hear me? If you can hear me, please type yes on the chat. All right, everybody. I am going to invite everybody else. I see that we have 11 people that were waiting for me. Thank you for that. I mean, today we are going to go through, we're going to do some analysis and we might take a couple of trades, right? So let me just invite everybody else here. Cool. So if you have any questions, don't forget to post it on the chat or type it on the chat. I have it on my other screen, and yeah, we're ready to go. And if you want me to go through a specific market or specific chart, just go ahead and type it on the chat too. That's why we're here, right? So how's everybody's trading week has been so far? Cool. All right. So, Meg, yeah, I can hear you clearly. Thanks, mate. So, all right. So, why don't we start by looking at gold, shall we? I know everybody likes to trade gold, and it is one of my favorite instruments to trade. And if you are a VIP, if you are a VIP, if you are on the VIP um, swing trading signals, you remember that we hit that long last week where we bought gold from these lows and we hit the highs here, right? This was our profit or our TP at the previous highs. And the reason that I decided to take um, the position here is because of this massive level that we have here. Right now, it is the weekly pivot, the monthly pivot, right? Actually, why don't we do something? Hey, Francisco. So welcome, mate. Welcome to the team. Welcome to the team. Anything you want to know, anything you want to ask, just type it on the chat. So, all right. So, can you please, in simple demonstration, explain how to determine the stop loss and take profit from the chart? Yeah, for sure. I mean, of course, yeah, I can do that. But the thing about that is that it depends. It really depends on how you trade. And all right, let's take an example. Let's look at this gold chart, right? Let's look at this gold chart. What does this gold chart tells you, right? And right, this gold chart to me, I mean, doesn't say much. For the time, I mean, we are inside of a super rangy market, and we had a big breakout in silver that was not followed through by gold, right? So, to be completely simple, hey Rajesh, how are you? To be completely simple, the way that you determine stop losses and take profits on your charts is by looking at the previous lows and the previous highs. That is all right. So if we take that, if we take, let's go to the 30-minute chart, right? Because and let's delete this indicator, right? So when we took that long position in gold, we took it at the breakout of these highs. This is where we took that long position in gold, right? And our take profit or targets were here, right? I don't know how many of you got scared because of this big move, right? That almost hit the take profit, but then went down and into negative territory, but just for a little bit, right? But I mean, the reason that we had the targets all the way around, actually was around the 1872, 1873 level, is because gold was and is trading inside of a range, right? So your target in a long position should always be at the next, or your first target should always be at the next previous high in a long position. And your stop losses should always be below the previous low. Why? Because you might, there's going to be sometimes that you're going to take a long position, but you're going to have a little bit of a drawdown in that position. And for example, if you take a long position here and you put your stop losses here, that would have been fine. But you cannot look at a trade in a vacuum, right? Let's imagine that you missed that. You missed the breakout here, and what you did is take the long position here with your stop losses below this low. You would have been taken out before price hit targets. And the reason that rookie traders try to put their stop losses very close to their entry is because by doing so they can take bigger positions, right? But that is not how this game is played. This game is played by managing risk, right? And by understanding where your trade idea is invalidated. In this case, our stop loss was not even below this low, but was below these lows right here. Why? Because if price, let's imagine, if price came back to the previous lows to retest them, we don't want to get, we don't want to be ticked out of a position because our stop loss is too tight. And if price comes back to retest this low, our long trade idea is still valid because the range has not been broken yet. But if price comes down and breaks the previous low and breaks these lows, then our trade idea is invalidated. So to put it simpler, every time that you're looking at a chart, or every time that you're looking to take a trade, and if you're struggling with your stop loss position, or how to position your stop losses, always ask yourself, what is the level that will invalidate my trade idea? For example, let's imagine that we buy gold at this level. There is absolutely no setup to buy gold. I'm not telling you to buy gold. This is not trading advice. This is just an example. Let's imagine that we buy gold here because we're trading inside of our range, right? Where is the level that our trade idea will be invalidated? Our long trade idea in gold would be invalidated. The level that it would invalidate our trade idea would be these lows. Because if price comes down and breaks with these lows, you have to look at the market as a structure, right? Right now, we made a lower high, and if price breaks with this low, we would be making, or price would be making, a lower low. So if price breaks with this low, it invalidates your long idea because the structure would be printing a lower low, and you don't want to be buying. You don't want to be in a buy position when the structure of the market is a bearish structure. That's how I look at the market, and that's how I position my stop losses, right? Cool. So we were going to start with gold, and I think that hey Kay, how are you? I think that well, I forgot to log into my trading view, but that's fine. It doesn't matter. So I think that we went through gold pretty quickly. In my opinion, I don't know what you think, but in my opinion, whilst we're still trading inside of this range, there's not too much to do, right? And picking up buys at these lows, in my opinion, is way too risky in the sense that the probability for a rally is not that high when we've had two sessions that have closed below the sessions open, the open level, right? So what I would wait, I mean, because let's go to the 4 hour chart, right? Let's go to the 4 hour chart. What I'm looking at is what I'm trying to do actually here is waiting for the opportunity to pick up buys at a good risk to reward ratio for the next big rally in gold. Because if you look at the whole chart, right, and that's why I have this alert here, because if price breaks with the 1880 level, what I'm going to do is I'm going to pick up buys at the retest of the 1880 level on an amazing risk to reward ratio, and I'm going to put a pedal here. I'm going to put my foot on the pedal on that retest for at least a retest of the 2000 level. But that's not what I want to say, right? We are in a very bullish market right now in gold. And seasonality, I mean, if you look at seasonality, right, and if you look at the seasonality chart of gold, February is not the best month to buy gold, right? But I'm not looking too much at seasonality at the moment because the market, I mean, the market that we are trading, or the market that we are living at the moment, is not the same market that we have seen over the past decade because of the coronavirus pandemic, right? And this big rally in gold is due to that. It's due because of the fiscal and monetary policies put in place by central banks. What happened is that to face the coronavirus pandemic, central banks started to print in a lot of money. Actually, you know that almost 50% of all the US dollars that are in circulation have been printed in the last year. That's amazing. Actually, I'm going to show you that. Let me just grab the thread. Because I mean, if you're trading forex, you know, you have to look. I mean, you have to understand global macro. So let's look at the M1 money stock, right? The M1 money stock is the most liquid, stock in the market, which is actual cash and savings accounts, etc. Right? And if you look at this, before the coronavirus pandemic, the M1 money stock, what was about this is in billions of dollars, so that's 3.9. That's about three. It doesn't matter really. It was 3.9, and right now we are at 6.7. So that's almost. I mean, the amount of U.S. dollars in circulation has almost doubled, and that is due to the heavy round of quantitative easing that the Federal Reserve has put in place, right, to face the coronavirus pandemic. Why? Because the equity markets were crashing, and to support to face that crash and to support the markets, right? Because if they didn't do anything, we would be in a really, really bad position. But what they did is that they started to pump in liquidity into the market to support that crash. And by pumping liquidity, what they do is they create a snowball effect to reboot the economic activity. That's the main idea behind the quantitative easing, right? But what happens when QE is this strong is that the risk is off, right? I don't know if you've ever heard about risk on and risk off. When the risk is on, it means that money is flying towards riskier assets. like equities, right? When the risk is off, money comes out of those markets and goes to less riskier markets like gold and like the Japanese yen. The reason why the Japanese yen is a safe haven is because Japan carries a positive trade balance. But that's a thing for another class, right? But I mean, it's really important to understand everything about global macro when you're trading currencies. Why? Because understanding this is going to give you the bias, and if you don't have if you don't have an overall bias, um, you are going to be placing trades on the wrong side of the markets. For example, if you didn't understand why gold was rallying the way that it was, you would have just traded technicals, for example, right here, and got caught in a super heavy bear trap, right? But because I knew what was happening with gold, I was only looking for buys. And actually, to me, this breakout and this retest was one of the best trades that I took last year, and actually one of the best trades that I have taken in my career. But that's, I mean, yeah, um, that's another story again. Yeah, but the thing is that what I'm looking is to pick up buys in gold for a continuation. Why? Because this round of quantitative easing has not stopped, right? Um, if you look at the Federal Reserve's balance sheet, right? Let's just look at the balance sheet right here, right? When it started expanding back in February, March 2020 due to the coronavirus pandemic, and then I mean, they started easing their asset buying program, right? But the Federal Reserve's um, uh, balance sheet is still expanding, right? Which tells me that the depreciation that we have seen on the US dollar is far from finishing, right? And the US dollar depreciating, the risk being off, everything points out at another big leg, at another big bullish leg in gold. That's why I have been trying to pick up buys. But again, coming back to technicals, right? And that buy that we picked up in gold at these lows, um, I wasn't going I wasn't going to let it. I wasn't going to let that trade ride. Personally speaking, I took 70% off of my position here, and then I got stopped out at break even on the rest, right? And that's quite an interesting example because if you come from the VIP or from any swing trading group, right? One thing that I have to tell you is that not every trade is going to be a swing trade, right? But when gold breaks with this level, right, it is going to rally heavy. And if we go back to the 50-minute chart, what I'm looking here for today at least is picking up a buy above these highs, right? If we take it's not an indicator. It's just the previous weekly highs and previous weekly lows. If we take also the daily highs and the daily lows, right? Right now, what we are looking at is an inside day, okay? An inside day. An inside day is just the today's range is inside of yesterday's range, right? And if price comes, if price starts to rally and first of all breaks with the daily open and breaks with today's highs and starts printing new daily highs, it's I mean, the probability of price retesting yesterday's highs and yesterday's open is very high. And because of the market that we are looking, momentum traders are going to start pushing price up. But again, if I decide to send a signal to buy gold at the above today's highs, which I don't know yet. I'm still deciding on that. We are going to take profits again below that breakout level, because that breakout level is so strong. If you look at this gray line, this is the previous week's high, and this is the weeks before, right? So we've had 2 weeks of trading that price has not been able to break these highs. Not only that, but I don't know if you're into pivots, but I do use pivots. Hold on, I need to log into my account, but I'm not gonna do that on a live session. Sorry about that. All right, so I can't look at pivots, but I had the pivot. The monthly pivot is right here. It's right here at these highs. So there's a confluence of levels around the 1875 to 1880 level that is super strong. And also, if you look at the volume profile, there's a lot of sell orders at this level. So it is a level that is going to be very, very hard for buyers to break through. Why? Because there is a lot of sell orders, and there will be a lot of sell orders at these highs. So for buyers to break through that level, they need to swipe all those sales orders, right? Which has not happened yet, right? And you can see it on every single retest that we've had of those highs. That's how you need to look at the markets, right? Markets are just orders, or buy orders and sell orders. And in this case, heavy sell orders that's what creates resistance. So that's gold. The other thing about this is that about this buy setup that I don't like is the risk to reward. If you look at a buy about today's highs, I would have to put my stop losses below yesterday's lows. And if I'm targeting yesterday's highs for a TP1, I'm looking at a 1-to-1 risk to reward ratio, right? And if I take profits here, I'm not going to take profits again here. Personally speaking, I would take first profits at the ranges highs and hold the rest of my position for a possible breakout. But looking at this possible setup, I mean, it's not an A+ setup. When I look at setups, I have a checklist, and I always look at confluence of levels. Let me see. I think we have a couple of questions. No, I don't trade with Robot. Everything that I do is manual. Yeah, Francisco, you want to trade the DAX? That's awesome. So, Leraro, are we going to get signals today? Listen, I'm not the kind of trader that's going to push you signals just because you need to get signals every single day. If I don't find a setup, I'm not going to send you a signal. But ask yourself, what do you want from your provider? Do you want to get 5 signals every single day, or do you want to get quality signals? Because this game is not about quantity, it's about quality. And once you understand that, you're going to really start making money, right? Because just think about this. Let's imagine you're trading today, right? Or I'm trading today, and I find a great setup to buy gold, for example, right? And I take it, and because it's an A plus setup, the probability of success is really high. So I hit my target. But then I start taking B minus and C minus setups. Those setups are going to eat on my profits. And at the end, you're going to break even or even start losing money in the long term. And yeah, you have to look at this on the long term. Yeah, Mustafa. No, these lines right here are the previous daily highs, the previous daily lows, and the gray ones are the previous weekly highs and the previous weekly lows, right? But yeah, why don't we have a look at something that we can actually trade? I do have my MT4 on my other screen, and I am in a couple of positions at the moment. I am short the pound yen still, and I am still short the pound versus the US dollar, and I have a long on the NASDAQ personally, right? But yeah, why don't we go ahead? And if you have a market that you want me to look at, just tell me on the chat. I'll be more than happy to do so. So why don't we start with the DXY? Always start with the DXY. Just have a look at this, right? Let me just delete this indicator. And this is the thing, right? And let's go to the weekly chart to look at this. This the DXY. If you don't know what the DXY is, the DXY is the U.S. dollar currency index, right? And the US dollar currency index, I'm sorry, is a basket of the most traded US dollar currency pairs, right? So this chart gives you a gauge of how strong or how weak the US dollar really is. So basically, by looking at the DXY or the US dollar currency index, which is the same chart that we are looking right now, you are looking at the price oscillation on the US dollar, right? And this is the weekly chart, right? And if you're trading forex, you always have, yeah, I'll get on the DAX, Francisco, don't worry, we have time. If you're trading forex, you always have to look at the US dollar. US dollar is king. This is the most strong currency, right? And if you, I mean, and right now we are here, right? And you're looking at the weekly chart. So we are looking at a 12-year bullish structure that we are retesting. Now, having said that, fundamentally speaking, there is absolutely no reason to be bullish on the US dollar. But absolutely no reason to be bullish on the US dollar. But that doesn't mean that we could have a short-term rally. And this is the reason that I'm short the GBP USD. And this is the reason that I am not going heavy on gold buys still. And the reason is just the technical levels that we are retesting at the moment, right? So you can see we have retested, this is the weekly chart, we have retested and rejected this 12-year bullish structure. Now, if we go to the 4-hour chart again, right? On the 4-hour chart, you can see that we are on a shorter term bullish structure, right? And at the beginning, where at the end of last week, I was looking at this level, these highs, the 91 level, right? And the reason that I am currently trading long the US dollar on different financial instruments like gold, the GBP USD, etc., is because of this, right? We are currently experiencing or seeing a relief rally, right? This is by no means a switch or a reversal in the market. No, this is just a bearish rally, right? But you don't trade what you think, you trade what you see, right? Even though I'm fundamentally bearish on the US dollar, and I'm looking for, and I'm gonna show you the level where I am going to short the shit out of the US dollar. Even though I am looking for that level to short, to go very big on shorts on the US dollar, I am going to trade long the US dollar whilst it's rallying, right? And the level that I'm looking at for shorting the US dollar is this previous base right here, right? Why? Because even with the increase in liquidity, or the increase in the M1 money stock, right, in the US, in the United States, this is the level that bulls were trying to hold, and throughout, let's calculate it to be exact, right? Throughout 116 days and 21 hours, this level held before it broke to the downside, right? And as you can see here, every time that it tested, I mean, all those rallies were just relief rallies, and it eventually broke. And after it broke, we really didn't get a real retest of that level. Having said that, um, having said that, we are in an immediate bullish market in the US dollar, right? And I'm always looking for confluences in level, confluences, right, in levels. So you see the 161.8 right here. These are the first targets. The 161.8 is just the extension of this first move, right, of the first bullish move. These are technical bullish targets, which confluence with that 92 level, which confluence with these lows. Not only that, but if price keeps rising at the speed that it's rising, it will be also retesting the top of that bullish structure, which if you zoom in on the chart is just a bearish flag. So when price hits, and if, because I don't know if it's going to happen, right? No one knows what's going to happen in the market, and if anybody tells you that they know that the price of anything is going to be at exact level in the next 6 months, that dude is just lying to you, right? No one knows what's going to happen. I mean, the only thing that you really know is the math behind your trading system, right? The probabilities of success of every single one of your setups, and how you manage your risk. That's the only thing that you really know and you can control. That's where the edge comes from, right? Um, and that's why discipline is so important in this game. But well, to return to the DXY, right? Well, I don't know what happened, but I'm going to come back to the DXY. So we're returning to the DXY right now. We are looking at a rally, and yeah, an appreciation of the US dollar against all the major currencies. And we are going to ride that move up. Of course we are. But when price hits this level, I will tell you. I mean, if you are a VIP, you're going to get that alert, and when I send the signals to short the US dollar because we are at this level, I will let you know that that is a big short level, and yeah, you should put a little bit more risk on the trade. Not too much, right? But that's the DXY. Okay, so you wanted me to go through the DAX. All right, let's go through the DAX. Cool. Listen, I love trading the DAX. It's one of my favorite markets, but to be completely honest, I hate it at the moment. You know, I'm a big fan of the German economy, and not only, I mean, not only the German economy overall, but if you follow, if you follow global macro, you know that one of the first economies that started to put out positive economic data after the pandemic hit was Germany, right? Um, I have that data. I mean, if you're a VIP, I'm gonna send that. I'm gonna send that data to the Telegram chat. But the thing about, that was back in, I don't remember, could have been um, August or so, So this is May, maybe here, October. I don't know. I was looking at buying the DAX because of that, right? But you don't have. I mean, you can't get married through to an idea, right? And to be completely honest, I couldn't find that great buy on the DAX at the moment. Having said that, why don't we just look at some levels on the DAX? Let's go to the daily. Right. This is this was all-time highs before the pandemic. I don't know, but yeah, those were the highs before the pandemic, right? And just by looking at the daily, right, and just by looking at price, just I mean ranging, and I mean this is a chop fest in my opinion, right? Just chopping around that daily level, just to be, I mean, just below the 14,000 level. That doesn't give me a lot of hopes for a breakout, right? And I wouldn't trade a breakout at this moment. Now, having said that, the actual buy on the DAX, we already missed it. When and it wasn't even that clear, right? The retest of these highs. And to be completely honest, I was looking at a deeper pullback to the 13,000 level, to 13,100 level for buys on the DAX, because this pullback was way too shallow. Another thing that I do not like is the lack of structure in this market right now. So just because it doesn't check a lot of my of the items on my checklist, I'm not gonna even touch this market. Now, let me give you an example of why I bought the Nasdaq. So that's the, yeah, let's use this one. That's fine. Right? Why I bought the Nasdaq? I bought the Nasdaq because it is a super structured market. It was retesting a massive key level, and when I saw this pin bar, I bought the Nasdaq, and I'm still in on this one, right? So you need to look. I mean, just because you like to trade the DAX, or because I don't know, traders like to trade the DAX, that's not a reason to jump in on a or to look at trade on the DAX. To me, that market sucks. I don't even look at it. It's not even on my watch list, right? I always look for structures in the market. If the market is not structured, I'm not going to trade it, because it's not going to give me. I mean, and the reason why I'm not going to trade an unstructured market is because my levels are less likely to hold. And not only that, but but price is more likely to spike down in this example, right? To spike down and not really hold my levels. All right, so you're welcome. 1830 on what, Agassi? What about the pound? What about the pound yen? Like I said before, full disclosure, I'm still short on the pound yen. And yeah, let's have a look at that. I sent out a signal yesterday. I don't have it here. Yeah. This was a signal to short the pound yen. I took some of my position here, and I'm gonna show you why. I'm gonna show you why. All right. So I took some half of my position here at this level, just because I didn't like the way that after a big move, right, to the downside, bears weren't able to break through that. But in my opinion, we are still kind of bearish in this market, and to be completely honest, it is, in my opinion, a good idea to put on a sell stop below. Let's grab the crosshair tool, shall we? Where is it? Here. Below these lows, right below, right at yesterday's open. So a sell stop at the 100, the 143.32 level, which stops below yesterday's high, above yesterday's high, at the 143.81 level, and targets at around the 142.35 or 30 is a good trade idea, in my opinion. And actually, I will be sending out that trade idea to my VIPs. Now, the reason that I'm looking for shorts on the pound versus the yen is because of this big level, the 143.80 to 144 level is just massive, right? Have a look at this. This is a daily chart. I mean, you can't appreciate on the daily. Why don't we go to a 4 hour again? Hold on. Right, here it is. So, why I'm looking for shorts on the pound versus the yen, right? It's because of this level. I mean, if historic price action always gives you hints of what to expect or what to look for. And in this case, even though we were ranging, right? Even though we were ranging, this is the level that buyers were supporting. And once we broke to the downside and retested this level, bears took control of this market on a massive move to the downside. But it was massive, right? So from high to lows after that level broke, we're talking about hold on, a 14.5% move to the downside. That is massive. That's 2100 pips, right? No, the webinar is not recorded, but it's on YouTube. So if you want to go through it again, just go to the YouTube channel and look through the videos. It's going to be there. So yeah, so after that level was broken with, right, bears took control of this market, and we haven't really retested this level until now. That's why I'm looking for shorts on the pound versus the yen, right? But we are in a very strong bullish market. Technically speaking, fundamentally speaking too, the yen is very strong, because what I told you, well, if the yen is very strong, this market should be to the downside. But I could show you the yen futures chart, and it has been quite strong in the past few months, but that's not the case. But even though we are in a very bullish market, just by looking at how strong that level is and what happened historically when we hit this level, it hits a lot of items on my checklist to look for reversals, right? And when trading reversals, I don't know if you are professional traders or not, but trading reversals is not the same as trading with a trend, right? So an advice that I could give you is, when you're trading a reversal signal, don't use the same amount of risk that you would use on a trend trading signal. That's just me. That's just how I manage risk. But in any case, I'm still looking for shorts below the 144 level on the pound versus the yen. I'm not looking for a swing trade in the sense that I'm not looking for a big move, for a big bearish move below these highs. This is going to be such a strong level. And to be completely honest, the 142.20 or these highs is the level that I'm going to look for longs for a breakout above 144. So what I'm trying to do is, I'm just trying to profit from a pullback. I would never try to profit from a pullback, right? But because of how strong this level is, and because of the bullish targets that we have hit, or the short-term bullish targets that we have hit, this is not a just a pullback, but it's a short-term reversal that I'm looking at, a possible short-term reversal, right? And as you can see, I mean, if price continues to range like this, I'm going to close the rest of my short position. But right now, I have the 50-minute chart on my other screen, and I have a lot, half a lot, no, 0.30 lot still running on this one. And why don't we put that trade, or I'm gonna send that trade to the VIP channel. I'm gonna do that in front of you. Take it as a freebie if you wish. Right here, this is the VIP channel where I send all my my signals and also the full rationale of my trades. So why don't we go ahead and do that? GBP Japanese yen shorts number 2, right? So it's a sell stop. Oh boy. Hold on. I think I have my keyboards in Spanish. I don't know if you picked up because of my accent. English is not my first language. I actually speak better French than I do English. So my sell stop will be at the 143.31. 143.31. Stop losses below, above, I'm sorry, yesterday's high. So that would be 143.81. Right? And TP1. Oh boy, what happened here? Or no, I mean just one TP, right? Take profit for a I'm gonna take a 2R, right? Not to be greedy. 142.30, right? 142.30, and that's I mean that's how we do things, right? I don't know if you all are on this VIP channel, but I will suggest you to get on this right now. It's only 50 pounds per month. That's 2 cups of coffee, mates. Really, for 30 days worth of great trading. So I'm gonna send you the link to get on that. To subscribe on the chat. I mean, you can cancel at any time. It's no big deal. But yeah, I mean, we're about to get hit on that one. I mean, does it look like a good trade? Yeah, it does look like a good trade. We had that that breakout of the short-term structure, then the retest, and right now it's looking bearish. And if we break with today's lows, the probability of price going lower is going to be higher. Yeah, I mean, just be careful when it comes to managing your risk, because this is a counter trend trade. Right, what's next? What broker do I use for MetaTrader? Cool. So, my advice is to go here. I'm gonna leave you a link on the chat, mate, and use this link to open an account with eToro, right? And if you do, make sure to let us know, because you're going to get access to all of this if you trade with that account. Cool. So that's the pound yen. The signal has been sent. You know what? I'm gonna send this as a freebie too, because not everybody is watching this show. So I am going to send it to the free channel, because that's how good of a person I am. Cool. So What else? The S&P 500. All right, the S&P 500. All right. Uh-huh. You want to look at the actual E-mini futures? Yeah, let's look at the E-mini futures. I hope I can get that. Right, and we're going to end up with no llegó nada al chat VIP, en serio. Pero vos estás en ese chat VIP, en el Learn to Trade VIP swing trades. Because if you're not, if you're not on the VIP channel for the swing trading signal, it's going to be hard to get that on another one. Right, so the S&P 500. This is the E-mini S&P 500 futures chart. I know that we trade CFDs. But if you look at, if you're analyzing equities, my advice is to just look at the futures chart. It's more accurate chart ever. So let's start with the daily. Right, all-time highs. We all know the story. So this is such a pumped up market. But again, I'm not looking for shorts here. Yeah, just make sure to use that eToro link to register your account and send us an email. So you can get you get access to everything. Cool. So the S&P 500, so pumped up market. This is absolutely crazy. This is absolutely crazy. The reality of the economy is not the stock market. But whatever. Like I told you before, we are not going to trade what we think. We're going to trade what we see. That's why I just bought the Nasdaq yesterday or on Sunday. I don't even remember. But yeah, so the daily chart, big level here, the 3852 level. Let's go back to the 1 hour chart, because yes, I'm still looking to buy. I'm not looking to buy the S&P 500 because I'm riding the Nasdaq. I'm not looking to buy the S&P 500 because I'm riding the Nasdaq. But if I were to look for buys on the S&P 500, what would be that level? That's the question, right? So we do have this big level. And all right, so here's the deal. A retest of this level is not going to give me an entry. For me at least. That's not how I trade. This is just not a deep enough retracement for me to look for buys. That's not how I do things. I'm sorry. Now, I'm not going to look for shorts, even though we could, right? And I'm going to give you the actual reason why we could look for shorts on the S&P 500, which I won't. But if you're into riskier trades, more power to you, mate. But yeah. Yeah, the reason that we could look for shorts on the S&P 500 is because if price continues to trade inside of this channel, right, and rejects these highs, the break of the previous lows or the break of the 38.25, let's call it, would give us a reversal trade. But I'm not gonna take that because this market is super strong. I'm just looking for buys. Right, having said that, right, the level or the previous level, which are these highs, these lows, and these highs, is just way too close to current price or to current prices, right, for me to deep buy here. This is a losing proposition, and I know it is because I've done the back test, and when it comes to equities, pullbacks are usually a lot deeper, right? Just look at this. So one of two things can happen, right? One, we break with these lows, right? And if we break with these lows, short or momentum traders on the short side and agos are going to place themselves short, and yeah, you could profit from a scalp to the short side. That's not my jam, but what I really like is a break above the 38.52 and a retest for me to get long. Why? Because it will give me a great risk to reward, right? If let's say that I want to trade the downside of this, right, on a break of these lows, and let's imagine that these are the highs of the current move, right? The risk to reward on a short trade on a trade to the downside, right? If you don't know what short is, I'm sorry. The risk to reward on this trade is just awful, right? Because I would have to take profits on yesterday's open. Why? Because this is the next key level. So we're talking about less than a 1-to-1 risk to reward ratio. Yes, to the upside, we don't have levels in play because if we break to the upside, we would be printing new all-time highs, etc. But really doesn't matter. I mean, you can always calculate targets to the upside, right? Let's use Fibonacci retracements 261.8, right? You could be targeting the 3900 level on a breakout or so. I mean, that this is just eyeballing, targets. But if price breaks to the upside, breaks with a 38.2, I would be buying, right? But my preferred buy would be around the 37.62 level, right? And this is talking about structure for our chart, right? Let's look at some levels. We do have this massive level here, and if you notice, without even looking, right, without even looking at historic price action, and just by looking at current key levels, you can see that this is a massive historic key level, right? Did we get triggered on the pound yet? Just a short. Well, we're about to get triggered on that one. Good luck, everybody. So, hold on. Right. So my preferred buy on the S&P 500 would be here. Now, having said that, I don't know if I'm gonna still be holding that long on Nasdaq. I have to figure that out that myself. Yeah. So why? Because I'm always looking for confluence, right? If we grab that crosshair tool and the Fibonacci retracement, and assuming that these are the highs of the move, I reckon we are about a 50% retracement or 38.2. That's exactly a 38.2, right? That's a 38.2 retracement of the current bullish move, and we are talking about 3 straight days of bullishness in the S&P 500 on a NFP week, right? So this first day, second day, and now we are on the third day, right? And this is looking kind of bearish pre-market. I don't know what. I don't know really, but this looks like nothing to me, right? If price breaks to the downside, I mean, this is where I will be picking up buys, heavy buys. Why? Because also, let's go to the hourly chart. That's a heavy move on the pound to the downside. That's gorgeous. We are in that trade now. Good luck, everybody. So let's go back to the S&P 500 and the hourly, right? This is why I like it, right? If we come back to retest this previous level, the risk to reward ratio is going to be just amazing here. Why? Because my stops are going to be just below this low, right? My entry will be around this dotted green line. First targets are going to be here. So to first targets, we're talking about a 2R, I think, or better. Almost a 3R to first targets. Second targets, we're talking about a 5R, etc. if you let it right. So that's my preferred zone to buy the S&P 500. Wow, that's a big move on the pound. Right. How do you get automatically the channel for the price? I don't understand that question, man. That makes no sense to me. I'm on the Learn to Trade VIP and your Discord, huh? Yep. So yeah, that's the S&P 500, and we got triggered on that pound yen short. We are on that trade, looking very good. Um, Still holding the pound USD. That Nasdaq long. You know what? Just hold on. I have to figure this out. You're going to have to give me a second. Now, hold it that one. Yeah. So, how do you get? All right. So we have been live for an hour. Um, uh, Thank you for joining me, everybody. Has been fun. I had fun. I hope you did too. I hope also that you got something out of this. If you are on that pound yen short, good luck. We are all on that one. Be patient with your trades. Always look to trade the best possible setups. Always look at trading your A plus setups. If you don't have an A plus setup, that means that you have never back tested any system. Please do that. Please do that. Stop burning money. And if you want to trade with us, if you want to be part of the VIP team, I'm going to leave you that link again on the chat, right? If you like, also, you know what helps us out a lot to reach new traders? That, if you really like this webinar, give the video a like, and why don't you tell us what you thought about it on the comments? That helps us a lot with the algorithm. And yep. Gracias, Francisco. Cuídate, suerte con tu trabajo. Nos vemos en el VIP, loco. Yeah, and if you don't speak English, you can speak to me in Spanish or French. That's fine. And thank you for joining me, everybody. If you want to be part of the VIP team and trade with us every day, you know what to do. The link is in the chat. I can't force you to do it, but it's only £50 a month. If you can't afford that, you shouldn't be trading at all. And thank you for joining us, and I'll see you on the next one. Cheers.